Good morning and welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. I hope Santa brought you all the presents you wanted for Christmas, and luckily for you, I'm here in Santa's place with a few more important presents to hand out. Context on a stock market ripping to new highs into year end. But first, here's what's on my mind right now. Nvidia has made its largest acquisition ever, buying assets from 9-year-old AI chip startup Groq for roughly $20 billion. Groq was just valued at $6.9 billion in a $750 million capital raise 3 months ago. Groq founder and CEO Jonathan Ross will join Nvidia. While at Google, Ross designed the custom chips that the tech giant would go on to train its AI models on. I caught up with Ross recently on my Opening Bid Unfiltered podcast to go inside the work Groq is doing, which explains the hefty $20 billion price tag for the company.
And so what we do is we build chips called LPUs. And LPUs are a little different than GPUs. GPUs are really good for training models. Training models is where you take all that data and you turn that data into something that's useful, that can interpret the world and say things. But inference is when you actually run that model, when it's useful. So whenever you go and you type into your favorite chatbot and you ask it questions, that's inference. We accelerate inference and we make it really low cost.
And I have a few investing resolutions for 2026 I will be sprinkling in throughout the show. Consider them stocking stuffers. One of them, question all management BS on earnings calls like never before. You have to do this. You cannot take what executives say as gospel on earnings calls. You just can't do it. Here on my Opening Bid Roundtable, Keith Buchanan, Global Alt Investments Senior Portfolio Manager, and Yahoo Finance Senior Reporter Inez Ferre. Good to see you both. Keith, I've been watching really all day long, actually since yesterday I should say, this Nvidia deal for Groq. And if you zoom out, I think it says so much about the mindset of companies and how the AI bubble, it may only be just beginning, despite all this AI bubble talk.
Sure, Brian, and thanks for having me. We're looking at it in a similar fashion. It's not necessarily a bid for a competitor. It seems like, and this is kind of what we've gathered from it, is it's a investment into capacity expansion beyond the current GPU platform that Nvidia currently has. It's an investment alongside of a competitor, in not only in the vertical they're in, but also looking at it from an aspect of just a capacity growth that seems to be, this is a positive affirmation of that capacity growth that grows beyond what Nvidia currently has in their vertical. So this is, in our opinion, a very positive checkpoint for where we are in the cycle. There's a lot of questions about where we're in the cycle and infrastructure build and is it overpriced and have we gotten ahead of ourselves. Nvidia with this investment, in our opinion, is saying no, we haven't. I see a lot to come in this investment phase.
And I got to give a shout out to one of my ex-followers here, watcher of the show, Sideline24. One of my resolutions, Inez, was to go out and visit an AI data center. This user telling me they have, he's working on a project out in Arizona to build an AI infrastructure plan. So it's fascinating to see what's happening in this country because of AI. And there's a question to you on this, which I haven't seen brought up a lot on this Nvidia-Groq deal. Was Nvidia potentially at risk at losing its number one spot, not today, not tomorrow, but let's say 5 years down the line to a company like Groq, and they figured, why not just pay big now, shell out a big check, and then nobody could touch us?
You know, Sozzi, I was listening to an investor of Groq on his channel about why this is so interesting. And this is basically what he was saying is that NVIDIA is seeing the writing on the wall when it comes to specialized chips, because you played that sound of Jonathan Ross talking about the inference technology that they have. And this is where some are seeing that where the money is at with these specialized chips and why NVIDIA would pay 3 times the value of this company. And by the way, Jonathan Ross is seen as an engineering genius within this industry. So yes, it may be that the NVIDIA chips, which are generalized chips, which are good at many tasks, are great, but now where the money is being seen going forward, where the reoccurring money may be, is in this specialized chip space. And that's why they are essentially buying this company in this deal that, by the way, is this licensing deal, which is an interesting also format for these. Now we are seeing more and more of these types of deals where the talent goes to now NVIDIA, where the company is still sort of more of a shell company, and this is because of antitrust issues to make sure that this goes through. But yes, Jensen Huang may be admittedly saying we have a great chip, but now we are now acquiring this specialized chip with Jonathan Ross, did the TPU over at Google. So it's definitely seen as where the market may be going.
And I should mention, reach out to Groq. They declined to make Jonathan available for an interview. Keith, let me get back to you here, because really next year, you're starting to get the sense, if we haven't gotten it already, some of the world's largest tech companies might go hunting in private company land. You know, the companies that have been raising money all the past 2 years at big valuations, they may go shopping to further boost, their capabilities. What do you think about that?
We absolutely think that has to happen in order for the store to continue to evolve beyond where it has started with the quote unquote picks and shovels over the last couple of years. We feel like to justify the valuations, the story has to continue to evolve in the spaces that we just haven't really grasped yet, in particular on the private market side. But we've seen some developments on the private credit side as far as the funding that have drawn some questions as to kind of how far this can go and how it will be all capitalized. So in 2026, the story has to continue to evolve away from some of the main culprits of the last 2 years into spaces that the market really hasn't appreciated the AI story to evolve to just yet. So we're looking for that evolution, and we feel like it has to come to justify valuations going forward.
Keith, how willing would you be to get outside of the Mag 7 and some of these big tech plays and get involved in the broadening out of the AI trade? And I'm even talking about something as companies that make concrete, companies that make steel rebar that are helping build these, put up these AI data centers, electrical power companies. Are you comfortable taking it to that level yet?
Sure. In our equity strategies, we've been taking it there for the last over the last year or so. Yes, we're looking at spaces, particularly in industrials, in that also in the utilities as well. Ancillary plays to the AI adjacent names and stories and industries that benefit from this build out, which might not have as much built in their valuations, also might not have as much debt or risk associated with this current trade. So we're looking at all those spaces that we can have a cheap entry into investing in this next phase of the build out that we feel like 2026 is really going to start to embrace more outside of the Mag 7. So we're absolutely been looking in those spaces.
And I'm not going to pretend to know if there's gold or silver in AI data centers, but whatever the case is, we are at another record for these two precious metals. Silver alone, Inez, up 40% in the past month. This is a massive gain.
It's incredible what silver has done. And strategists are saying that, we have seen short squeezes on silver before, but this is now, you are seeing a deficit in the market. This is what they're saying is different from other times. Silver, the best conductor of energy, of electricity. You also have copper that is the second best, and copper has also been at record highs as well. So yes, these are industrial uses for the metal, that this is where strategists are saying why they are so bullish on this, because you do need these metals in order to, if you're going to do manufacturing, data centers, onshoring, et cetera, this is the use for some for those metals. And you've seen these mega moves in this. Now, I will say that I have spoken to at least one strategist that says, be wary of these levels. I mean, you are buying at record high levels. And he's saying that the last time we saw this type of move with silver was in 1979, 1980. And then you saw the metals crash after that. So it just depends. Again, you have, though, some strategists that are saying that in this case, it's deficit. When it comes to gold, it's a different story because you are seeing central banks that are acquiring gold, et cetera.
Keith, I could sure make the case that we are right in the middle of a precious metal, or towards the latter stages of a precious metal bubble, more so than we are at an AI bubble.
Yeah, look, the charts tell a simple story. It's been straight up and to the right for gold and silver as well. We have both in our strategies, our global macro strategies. And we feel like the gold allure, and which is why we have a heavier position than silver at this moment, kind of mitigates a lot of risks that we look at from a global macro standpoint, whether it's fiscal here in the U.S. or worldwide. Also, the monetary policy mistakes that have the potential to really propping up in 2026 as well. So we're exposed to both. Copper is one that Dr. Copper has been looked at as a barometer of the expectation of global global economic growth. And that's why the latest run was 2005 to 7 during the build out of China from an industrial standpoint. We really don't see that demand right now, so we feel like there's some froth or sentiment that's bubbling up that's really getting into the prices of gold, silver, and copper. Copper we feel like has a little more to lose, as the industrial demand of it really doesn't really speak to the prices that we're at right now. So we feel like gold and silver have a little more risk reward to it, even at these levels, to our clients' portfolios than some of the industrial metals like copper.
Keith, how do you screen or decipher when it's time to cash in on these gold and silver moves that you've had success with?
Sure, we've trimmed some gold. We actually trimmed some gold and bought some silver, and then trimmed gold outright here recently in the last several months. Right now, it's a matter of how are we looking at the long-term price of gold, as well as we own some of the gold miners as well, and that has a little equity exposure. But right now, we've owned these for a couple of years, is the gold positions that we have. So we're just looking at good points on the charts, frankly, to step away and monetize some of the profits. But we still have a bullish outlook on the metal itself. We've taken down some of our exposure just to be rational and frankly, to be responsible for our clients' portfolios. We feel like it got a little bit ahead of itself, but we're still optimistic going forward on the allure of the metal.
And as I've worked up 10 of my investing resolutions. I'm going to post it out there on Sunday, but curious on what's on your resolution board as it pertains to investing as we go into next year.
I think that as far as investing and looking at the investment picture, I'm going to be watching this, what's been happening between Bitcoin, crypto, and the precious metals, as we were just talking, because the outperformance of the precious metals has been just bonkers. I mean, a monster rally. And when it comes to crypto, everything that the crypto community wanted has been given to it this year with respect to regulation, with respect to adoption, et cetera. So going into next year, I'm curious to see how this shakes out, because you're starting to now hear the metals investors sort of taunting the crypto investors. You guys should have been in metals and not in crypto.
Oh, I love the smack talking. And as you know, you and I have covered a lot of stories here this year. Every day there's something new to cover, a new person to talk to. Is there one story that has surprised you? I can tell you just from my own perspective, the speed at which the market has rebounded after Liberation Day. That is one that has surprised me. And the number two, we haven't really seen inflation pop up to the extent you would have thought given the tariffs.
We haven't, and I think that what I'm watching is the energy market, because you have this demand that you now have for AI and for data centers, et cetera. And then you also are looking at oil that is lower. You are looking at gasoline that is at 4-year lows. So I'm interested to see how this sort of shakes out with the energy market going forward into 2026 and the affordability crisis that is deepening in the US and this K-shaped economy and how that's going to shake out.
Keith, is there one or two stock moves that have surprised you this year?
Sure. Just from a global, more macro standpoint, you hit on it a little bit earlier, but corporate earnings and resilience has really flexed over the last couple of years in a material way, particularly coming out of 2022 and inflationary pressure. But how they really baked in, implemented, and pushed through the tariff implementation that came down on corporate America, and were able to not only mitigate any disastrous margin result, but also could achieve earnings growth on a year-over-year basis that's exceeded expectations in each quarter since the implementation has started. So we've been just in awe of corporate earnings resilience and the margins that corporations have been able to put up, given those pressures, and also the consumer. You hit on it earlier, but the consumers, now the labor kind of seems like it's showing some spots of weakness, but the consumer's been able to hang on and continue to spend us away from any deflationary pressure. Does that hold up in 2026 is a big question in our mind.
Really good analysis to kick off the day here. A big thanks to Keith and Inez for joining the Opening Bid Roundtable. Appreciate it. Happy holidays.
Happy holidays.
Coming up, companies signed billions and billions of AI deals this year. I sat down with AMD Chair and CEO Dr. Lisa Su to hear about her company's interesting agreement with OpenAI. That's next in Opening Bid. AMD has had an eventful year, to say the very least. Consider this: it will end the year with OpenAI slated to become one of its biggest investors. I guarantee you that was not on the bingo cards of many out there. Its new bestie has helped power the stock up 78% this year. I caught up with AMD Chair and CEO Lisa Su recently for perspective on its road ahead.
You know, when you think about where we are today, it is all about AI and how do we use AI to really impact every single industry out there. And the foundation of that is you need to have enough AI compute. And so, yes, what we announced today was a 6 gigawatt deal. It will be, tens of billions of dollars of revenue to AMD over the next few years. And it's really an opportunity for us to even partner deeper with the clear market leader in AI. And so we're talking about building 6 gigawatts together. The first instantiation will actually go into place the second half of next year. We see it ramping to double-digit billions of revenue for us. It's incremental from an AMD standpoint. And most importantly, it actually has us working together on the technology, because the technology is just super hard. There's so much we have to do to get it all working. And so bringing the best of OpenAI and AMD together is what this deal is all about.
A deal like this, Lisa, it doesn't happen overnight. You didn't wake up Sunday thinking, all right, we're going to announce this on Monday. When did you start working on it? And what was it like working with a Sam Altman to get this through the finish line?
Well, the key, Brian, and I've told you this before, the key in our world is it's all about roadmap. It's all about the technology. It's all about ensuring that we're meeting the performance capabilities for the most demanding foundational models. And that's what OpenAI has. I mean, they have brilliant engineers. Their models are used everywhere. And so this has been a process. It's been, several years in the making. It started with them testing our MI300 and doing some early work on MI300. That moved to MI350. We've done a lot of work on software. And, it's culminating in, they've given us feedback on what they believe best in class is. And MI450, which we have coming next year, is absolutely that. It's best in class, AI computing. And, the fact is, having a team that is, so much at the center of the global AI build out, being super excited to be a lead customer for MI450. I think it's a great thing for us. It'll push us to get the technology out even faster. And it's been a couple of years in the making, but we're super excited to be able to talk about sort of the breadth and the depth of this relationship, as it relates to our overall AI capabilities and AI business.
Lisa, I'm trying hard to make sure I got all these terminologies down correct. So bear with me if I get one wrong. So what would deploying 6 gigawatts, how does that change the future of AI, and what does that mean to the average person who's only now starting to come across AI agents on various platforms?
Well, Brian, it's a great question. I mean, I think we've all experimented with AI. People, think about ChatGPT and Gemini and asking it questions. But what we're seeing is this is really only the very beginning of people taking AI and using it for improving businesses, for improving research, for improving, all kinds of capabilities. And what we see is, to get more capability, you need more compute. So the work that we're doing is building the foundation of this AI world. And what we want is to make sure, like, every time you have something that you want to use AI for, there needs to be able to have enough compute on demand. And that's why we're talking about building multiple gigawatts. I mean, it is, once you build out all 6 gigawatts, I mean, you're talking about millions of GPUs. And that millions of GPUs will go towards every user having, sort of intelligence at their fingertips.
How difficult is it to build out this type of infrastructure?
It's incredibly difficult. Let me say, Brian, it is incredibly difficult. But we have been working on this for years. And, sort of our technology is really around the chips, about ensuring that, we are constantly looking for pushing the envelope on sort of the next generation. So we're really excited about our MI450 generation. It has 2 nanometer technology, so the most advanced fabrication capability. It has, rack scale solutions. So we're really putting all all of these compute elements together. And the way to think about it is it takes a village to build this all. So we are, of course, very proud and focused and dedicated on our piece of it. But it's us, it's our cloud service partners, it's obviously OpenAI and the model users. We all need to come together, plan this infrastructure together, make sure there's enough power in the world for all of this AI compute. And once we put it all together, we deliver just, fantastic capability to the world.
Is there enough power?
There is not enough, but we are actively building everywhere. I mean, this is, all about ensuring that there's enough power, certainly in the United States. I think there has been tremendous focus by this administration of ensuring that AI is top of mind, and that's super important. It's ensuring that we have enough manufacturing capacity to do this. It's all of the above. And so I would say that the industry is coming together. I mean, this is one of those points in time where you need every part of the food chain to come together and say, we want to do this. We want to build fast. We want to build big. And we're all putting our best efforts, towards this big vision.
So much has happened since I last talked to you, Lisa. I mean, of course, this deal is very much front and center. We have the U.S. government now has a stake in Intel, which wasn't on my bingo card coming into this year. Some would say these tie-ups are causing risks to the AI industry or even the tech industry. What do you say to those critics?
Brian, I would say that that's probably thinking too small. I mean, you have to really look at, what the power of this technology can do for the world. And if you think about all of the applications that can take advantage of AI and computing and, sort of the massive investments that will have, significant returns on the other end, it takes time to build all this out. So yes, we are investing heavily. Some might say investing ahead of the curve. I actually say investing at the right pace because we want to accelerate. This is a place where when companies and partners make bold moves, it will be rewarded because we will do things that you previously thought weren't possible. We're actually bringing the industry ecosystem together so that we're actually getting the best of each of our teams so that we can actually accelerate the rate and pace of deployment and AI innovation. So, I really believe that this is the beginning of a 10-year kind of super cycle, and we're in the very early innings of this. I think, Brian, I used to say that I thought the AI TAM just for silicon accelerators, sort of our piece of the business, was going to be, $500 billion. And some people thought, boy, that was a big number. And now maybe I've underestimated that number. And we have a lot of clear, demand across the world, for this infrastructure.
Coming up, Brooke De Palma takes the baton on Market Catalyst. We'll be right back.